Good morning and welcome to today's morning report with me, Rich Perry, market analyst at Handtech Markets for Tuesday the 4th of November. These European stock markets are actually started fairly positively, and that's despite a pretty neutral session that we saw on Wall Street yesterday. Nothing really moved the market either way, pretty flat into the close, and that was also followed by a fairly neutral session in Asia as well. The only real exception being that the Nikkei continues to soar higher as this Japanese yen has been sold off. But the positivity has actually come through today on the European session, and that is also one of the drivers behind the markets being a little bit cautious yesterday. Was certainly the fact that we saw the oil price break down once again. The oil price, this is on WTI oil, having looked to form support around the $80 mark. We had a decisive breakdown yesterday, and that move has continued today, and that's putting pressure certainly on a lot of the oil stocks. And it certainly is a bit of a drag on sentiment there, because the concern being that there is a lack of demand in the system rather than just the simple supply factors of oil. I think it's the fact that the lack of demand is pulling the price lower. So that is certainly an issue that we need to look out for. But other than that, the actual stock markets have found a little bit of support. This rally that we've seen in the last week or 2 weeks continues to move forward, and it's just unwinding some of that weakness that we saw yesterday. Markets in Europe were certainly weak yesterday, almost 1% lower in fact, and it's just regaining some of that lost ground. But in terms of the Forex indices, the Forex markets, the dollar index is just consolidated a little bit, nothing really too major. But look at that huge rally that we've had in the dollar in the past 4 days. So you can perfectly understand why that the dollar is taking a little bit of a pause for breath, maybe a little bit of profit taking, with euro sterling both higher, and the yen also just unwinding some of that momentum. The only real movement in the dollar's favour today is the Canadian loonie, but certainly the Aussie dollar is reacted positively to the announcement that the Reserve Bank of Australia has kept rates on hold at 2.5%. And the other Forex majors have also performed pretty well today so far. Today we've got the not a huge amount of economic data, certainly not tier 1 anyway. UK construction PMI, the construction sector in the UK is less than 10% of the economy, so it's not a huge announcement for the UK, but still 9:30, 63.5 is expected there. For that could have an impact on sterling, and also into the afternoon you've got the US trade balance that comes out 1:30, and that's expected just to basically stabilise around that, not far off that 40 billion mark. Okay, so that takes me to my chart of the day, which is the Kiwi dollar. I spoke of the Aussie dollar yesterday, and just look at the Kiwi dollar. It's continuing to put pressure on this 77 figure mark. It's had a little bit of a rebound today, as have all the majors, but certainly looks like the pressure is increasing to the downside. Looking at these momentum indicators, certainly these the one that I'm really concerned with is the MACD lines that just unwound as the rate unwound back towards that downtrend, but it's they're now turning lower. They're now crossing over, and it looks like a pretty bearish signal once again. The RSI sort of confirming that move as well, and also the stochastics are pretty bearish in addition to that. So what we've got on the intraday chart is this old support around 78 big figure is now turned into the new resistance. So anything, I think, up towards that 78 figure, I suppose if you zoom in, you could argue that anything between maybe 74.50 towards 78 could be an area to look to sell, and also there is a band of resistance that comes in around about that 77.70 mark as well. So a couple of levels there for you to work with, but it certainly looks on the daily chart that this rebound is probably going to be used as a chance to sell. Even on the intraday hourly chart, the RSI is not really going anywhere. The MACD lines are just unwinding back towards neutral again, and the stochastics have already turned over. So I think we could be close to being another chance to sell, and I think further pressure back towards that 77 big figure mark will be seen in due course, with a likely breakdown. And that breakdown, if I quickly zoom out on this Kiwi, that's a huge support around this level. 76.82 is the intraday low, you'd argue, but certainly 77 big figure. If you start moving underneath that, then the trouble is going to be seen. But you'd be pulling back towards these Q2 2012 lows, and subsequently Q4 2011. So there is further downside that we could see if that level is broken. Anyway, I wish you good luck in your trading on the Kiwi today, and I will speak to you later. Thank you.